So, if you've been keeping an eye on the Dayton apartment market over the last few years, you've probably felt a bit of whiplash. It's been a ride, that's for sure. A period of real uncertainty that's left a lot of us wondering, what in the world is coming next? And that really gets us to the big question, right? Is this slowdown we're feeling for real? Is the market finally cooling off? Or is this just, the market catching its breath before the next big sprint? That's exactly what we're going to dig into. Okay, so to really get this, let's bring it all back home, right here to Dayton. When we talk about all these market trends and big ideas, what we're really talking about are buildings just like this one. We're talking about the real-world choices that renters and landlords are making every single day. To make sense of where we are now, we absolutely have to rewind the clock just a little bit and talk about the absolute fever pitch the market reached not too long ago. I mean, just think back for a second. It was a complete race, wasn't it? It felt like a mad dash. Demand was through the roof, apartments were incredibly scarce, and if you saw a place you even kind of liked, you had to pounce on it immediately. Otherwise, poof, it was gone. And all that intense demand naturally led to rent prices climbing at a rate that was, let's be honest, just not sustainable. That whole period of extreme, super fast growth, that was an anomaly, a market spike. It was never going to be the new normal. Sooner or later, that fever had to break. So, the fever's broken. But what does that actually mean for the current climate? What's the vibe on the ground in the market today? Well, things definitely feel different. You might be seeing a few more for rent signs around, but the reality is buildings are still mostly full. The real change, the big one, is that those shocking, jaw-dropping rent hikes are slowing way down. Now, they haven't disappeared, but the pace is much more manageable. And all that new construction, it's added just enough new options to help ease some of that pressure cooker feeling we all had. And this brings us to the main idea, the core theme of what's really going on. Look, the market isn't crashing. It's not about to fall off a cliff. What we are all witnessing right now is a great rebalancing act. Let's just walk through that journey real quick. Before 2020, things were pretty stable, pretty predictable. Then, bam, the surge hits. Demand just goes wild, and that takes us to the peak with those extreme rent spikes. After that, of course, came the cool down, a much-needed return to planet Earth. And that's what lands us right here today, in this new and sometimes a little uneven normal. So, why did all this happen? Well, it really just boils down to classic economics. That frantic, gotta-have-it-now demand from the peak has finally cooled off. At the same time, just enough new supply, new apartments have come onto the market. That has fundamentally flipped the script on the balance of power from where it was just a year or two ago. Sometimes the best way to really wrap your head around a big shift like this, it's to visualize it. So stick with me here. Let's do a quick thought experiment. I want you to picture a simple line chart, but it's not tracking the actual price of rent in dollars. No, it's tracking the rate of rent growth, how fast prices are increasing year after year. For years and years, that line would have just looked like a gentle, predictable wave bumping along near the bottom of the chart. But then, during that market fever, that line shot straight up, forming a huge, steep, jagged mountain peak. That was the period of those crazy double-digit increases. So, where is that line today? Well, that mountain has come all the way back down. Now, the line hasn't dropped below zero. That would mean rents are actually falling. Instead, it has settled into a low rolling hill. There's still growth, but it's moderate, it's sustainable, and it's much closer to what's historically normal. That mental picture really tells the whole story. Okay, so a rolling hill instead of a mountain? It's a nice visual, but what does it actually mean for your wallet, for the real-world decisions that you have to make? This right here is probably the single biggest misunderstanding out there right now. Lots of people hear the market is slowing down and they think, great, rents are about to drop. But the reality is a little more nuanced. Slowing growth means the era of landlords having all the power and naming any price they wanted, that's over. They have less leverage. But it doesn't mean prices are falling. It just means they're rising much, much more slowly. So this new rebalanced market, it really has a whole new set of rules. Let's break down what this means for everyone who's involved. So, what does this new landscape mean for you? Well, if you're a renter, this is good news. You've got more choices and a bit more room to negotiate. The pressure is off. If you're a property owner, the whole game has shifted. You can't just slap on aggressive rent hikes anymore because good residents might actually leave. The focus now is on retention, and for investors, the days of easy, rapid gains are gone. Success now is all about smart timing and having a really clear understanding of the risks. So here's the bottom line, the crucial point. The Dayton apartment market isn't collapsing, it's normalizing. This is a market that no longer rewards panic or rash decisions. Instead, whether you're a renter, an owner, or an investor, it now rewards patience and a clear-eyed understanding of this great rebalancing act.